Kevin Phillips, Bad Money, Reckless Finance, Failed Politics, and the Global Crisis of American Capitalism. In his Bad Money, Reckless Finance, Failed Politics, and the Global Crisis of American Capitalism, Kevin Phillips unravels the deeply entrenched problems within the U.S. economy that have led to vulnerability and instability, delving into the world of shadowy financial institutions, debt, and oil policies. Phillips argues that the rise of finance in the U.S. political economy spells potential disaster. Through a comprehensive analysis of historical patterns, political decisions, and evolving economic structures, this book's summary explores how the U.S. navigates a path that may ultimately lead to national decline.
The danger of America's financial sector. Officials underestimate the problems with the U.S. economy, which is weak and vulnerable. The nation's politicians may not be prepared to handle the damage caused by policies on debt and oil. The metastasizing financial sector is a broader, more pressing concern that includes shadowy institutions that create money and evade regulatory scrutiny. The sector's dominance in the U.S. political economy is a worrying development, as history shows that when finance takes center stage, decline follows. The idea that the financial sector creates wealth and efficiency is nonsensical. America's bubble economy. In 2007, the U.S. economy was on the verge of collapse due to credit shortages, subprime mortgages, and the dangerous financial bubble that had been created over the preceding 10 years. Despite the warning signs, the government downplayed the extent and interconnectedness of the problems. Major financial institutions had become too big to regulate and had invented financial products whose risks were poorly understood. Meanwhile, ordinary Americans were facing increasing risks while being unaware of the impending crisis. The Financial Services Modernization Act of 1999 had created dangerous financial interdependencies. The U.S. economy's dependence on the financial sector was a harbinger of decline, and the dollar's backing depended increasingly on hostile oil-producing entities. The rise of the credit society and financial deregulation. The American transition to a society of debt began in the 1970s, fomented by financial deregulation and innovative products such as derivatives. The financial sector, empowered by deregulation, became interwoven with government and politics. Leaders like Margaret Thatcher and Ronald Reagan rejected the Keynesian economic orthodoxy and embraced tax cuts, government deficits, and deregulation. The Federal Reserve, with its bailout of Citibank and the junk bond sector, set the precedent that failing institutions would receive government support. The U.S.'s current account deficits and reliance on foreign investment turned out to be bubbles that burst in the 2008 real estate crisis. Economic faith and the efficient market hypothesis. The book explores how the ideology of the efficient market hypothesis gave rise to deregulation and unrestricted financial innovation, allowing hedge fund traders, mortgage brokers, derivative engineers, and investment bankers to operate unchecked. Until recently, this hypothesis was an article of faith, justifying government intervention in the market to be limited. Regulators were portrayed as hindrances to the efficient distribution of economic resources. The author describes how this ideology found support in the Republican Party's closely linked evangelical Christian base, as preachers of the prosperity gospel told their followers that God wanted them to be rich. The book also highlights how the government used statistics to manipulate the inflation figures, underreporting the inflation rate to make the market seem truer than it was. The author argues that a regulated public utility model for banks is needed to prevent big banks from failing. Finally, the author compares the economic policies of old-school Democrats, such as Truman and Eisenhower, who saw little connection between themselves and the moneyed elite, to those of Thatcher, Reagan, and their disciples, who embraced the Chicago school ideology and promoted a hands-off approach to the economy. Shifting risks through securitization. Securitization enabled lenders to package saleable securities of mortgages and loans, allowing them to enjoy the benefits of extending credit without the risk of non-repayment. This method shifted risk from financial institutions to middle-class citizens who were least able to bear it. U.S. borrowing increased in the 90s because stagnant real incomes forced citizens to borrow to stay afloat. The most remarkable aspect of securitization was that the institutions and experts running this business didn't understand what they were doing. As financial deregulation created institutions with complex interrelationships, money was created outside the regulated banking system, and liquidity moved through unregulated channels into the economy. Oil, a battlefield of power. From the rise of empires to modern geopolitical struggles, the world's dependence on oil has played a significant role in shaping history and power structures. As the world reaches peak oil production, the implications of diminishing resources have fueled global competition, challenging the US's dominance and creating a battlefield for power. Oil has played a significant role in fueling the rise of empires throughout history. From the Dutch harnessing wind and water in the 17th century to coal powering Great Britain in the 18th century, and abundant domestic oil underpinning US might in the 20th century, empires depended on energy resources. However, with the modern US's dependence on foreign oil, it has put itself at serious risk. The West's long-standing appetite for oil has been the main driver of its Middle East policy. Great Britain and the US have invaded Iraq several times in history as part of their geopolitical struggles over oil. The world is approaching peak oil production, leaving insufficient oil for growing global demand. National state oil companies in China, the Persian Gulf, and Latin America are challenging the US's dominance of the global market, creating global competition for power. The geopolitical implications of peak oil are already unfolding, marking a significant shift in the global landscape. Petroleum exporting countries hold substantial dollar reserves. If they wished, they could attack the dollar, and they seem to have been shifting more of their reserves to the euro away from the dollar. In the past, suppliers priced oil in dollars and invested their receipts in dollars, so oil and the dollar strengthened and weakened simultaneously. As a result, the oil standard replaced the gold standard, and the dollar's weakening in the face of rising oil prices may be a symptom of a deeper, subtler realignment. In summary, oil has played a crucial role in shaping world history, and modern geopolitical struggles over oil underline their significance. As we approach peak oil production, diminishing resources have fueled global competition, challenging the US's dominance and creating a battlefield for power. The shift in global landscape, coupled with the geopolitical implications of peak oil, creates new risks and opportunities, marking a new chapter in world history. The parallels of faded empires. The decline of American power is akin to what happened to Spain, Holland, and Britain. Party leaders court financial interests aggressively, and dynastic successions in politics is worrisome. The rise of finance mirrors the decline of real national power, and American capitalism is in crisis. Finance is not a reliable guarantor of power, as seen with past empires. The US inflated its currency and fueled bubbles that caused severe economic consequences. The debt bubble is expected to further damage US prestige and power. However, by making a new pledge to manufacturing, sound financial regulations, and education, the US may get a second chance to improve.
As Kevin Phillips reveals in A Bad Money, the trajectory of the US economy is plagued by issues that intertwine to create an unstable system. From the rise of the financial sector and its unchecked power to the enormous weight of debt and reliance on foreign oil, America's imperiled economic state too closely echoes that of historically fallen empires. These critical insights help to expose the potential downfall of American capitalism and emphasize the need for a renewed focus on manufacturing, education, and sound financial regulation in order to steer the nation towards a path of recovery and stability.